Right. So lastly, we completed most of the areas related to government grants. Today I am planning to do some questions about this and then financial reporting aspect plus government assistance, and then we are going to discuss the disclosure and then think about government grants. I hope you are comfortable with the definition about government grants. If there are any specific cash inflow from outside, like a government entity or foreign company or kind of a institution, that should be accounted as entity because it's an economic benefit to the entity. We need to decide how we are going to account it. It may be cash, maybe other asset. And salary ටිකක් හම්බෙන්න පුළුවන්, land එකක් හම්බෙන්න පුළුවන්, or else whatever the expense may be reduced. Expense may be reduced. So if there's a loan, you are getting kind of a less interest rate, it's a benefit, the deduction from your expense. That should be accounted, right? So that benefit should be accounted. The way how we are going to account is the content we discussed. We are supposed to discuss, right? We have two approaches. First one, capital. Second one, income. Can be capital approach or the income approach. So then that's up to you to decide how we are going to present that in the financial statement. Last week we discussed, we may have government grant or government assistance. Government grant should be accounted. To be accounted means we need to pass double in the books. Right. So whatever the done, if you want to recognize that, these are the two criteria to be satisfied. If you want to recognize in the books, you have to satisfy two criteria. Two criteria. So then whatever the given condition should be satisfied, it should be a receivable. The grant will be received. It means that there's a high possibility, high probability to receive it, right? Then all those two factors should be satisfied to recognize the grant. This is a highly possible question in the examination. To recognize a grant, what are the elements we need to satisfy? What are the elements we need to satisfy? So then if you have a question about this, so then the standard says like this, why we need to comply with this? That's a question from your end now. So the standard says to recognize the grant, you have two criteria to satisfy. So then we can ask why we need to satisfy it over this. Here what we are going to do, we are going to recognize some kind of a benefit. If you want to recognize a benefit, that benefit is in line with some of the conditions. If you can't satisfy it, you can't recognize it. So then you should have kind of the ability to satisfy those conditions. Otherwise, don't recognize. Or satisfy the value. Engagement is recognize the so then wow, American American ලොකු ඩවුන් එකක් හම්බ වෙනවා කියලා හිතන්න. ඔයාලට අග්ගාල කැපිටලයිස් කරගන්න ඕනේ. ඔයාලට හරියට ඒක කරන්න බැරි නම් ඇඩ්‍රස් කරන්න බැරි නම් අග්ගාල දෙන්න. You need to fulfill your conditions. So let's first you need to recognize that. So identify that, right? And then you can, fulfill these conditions. You can have that capability, but grant may be relating to some other conditions, some other factors. You need to consider that as well. So then you can service, you can give that conditions, you can reply for this condition, but that other party may take some other decisions. They may can stop this grant scheme. They can come up with some other suggestions. They can disclose some other conditions. So then this should be very clear. It should be received. Right? So these are the two conditions. Without receiving, you don't recognize. Why you are recognizing? For recognize the form recognize the land receiver case. So then if you are not getting that, you have to go right out. It may be experience. That's it. And we have on the One day, so then people who are not coming to lectures, be careful about this consolidation, right? So like more next week onwards, I'm planning to start consolidation. We are going to now not going fast into lectures, then complete time 1 month, 2 months lectures. And the time you can go out. If you are missing something about consolidation, is there what? So for consolidation, you have to be in the class in hybrid mode with the mentality and the physicality. Both should be there. If you are missing something, consolidation full blank कराया. ඊට පස්සේ ඔයාලට මොනවද කියන්නේ කියලා තේරෙන්නේ. Step by step, it's done. It's the last time you are learning consolidation, right? Next week onwards. Okay. Right. So that I hope that this is clear. This is a really important factor. To recognize a grant, you need to satisfy these two criteria, right? Whatever the organization you are going to recognize a grant, these are the factors you need to consider, right? These conditions may be different. You need to evaluate that. The set of condition, evaluation of this set of condition is the critical element. So there may be set of conditions. You need to have a qualitative evaluation that you can achieve that or not. That's why your role. That's why we need you to evaluate this and recognize the grant. In the exam, you don't have that type of a question, but your role in near future will be this role to evaluate this condition, whether company satisfy this condition or can you recognize the grant. That is your role. To evaluate that set of skills or conditions, have kind of capability. It may be kind of a ratio, it may be kind of a performance evaluation, or kind of a industry criteria, or some other qualitative factor. Something like you have to give more than 100 employment, and you have to earn more than $1 million per month. Those may be the criteria, condition, right? So then if government want to encourage to earn foreign currency, we are putting this type of condition to give government. So then this condition may be vary. Keep in mind. Right? Okay. So these are some examples. Forgivable loans. There may be a loan below market interest rate. You have to use SLFRS 9, but the benefit should be considered as a grant. Interest treated as a government grant, right? The first para also very important. It makes no difference in the treatment of the grant whether it is received in cash or given as a reduction in the liability to government. The manner of receipt is irrelevant. That's really important. Maybe a asset you are going to receive or deduction from the liability. But the loan එක කරන් දෙන government එකේ. Government එකේ ගන්න loan එක. ඒවත් loan එක කියන government. ඒකත් government එකක්. Right? So then cash, not in cash mode, it may be kind of a land, it may be kind of some other bulk of inventory. Cash or non-cash element may be there. Or it may be kind of an asset or kind of a reduction of liability. Reduction of liability or reduction of the expense. So then you're supposed to pay some interest. You are liable to pay some deduction. You are liable to pay some amount in the deduction. Concessionary rate, right? You are enjoying type of a below interest rate compared to the market. If it is so, it's a grant. So these are the two examples. This is important. These are the two approaches we discussed: capital approach and income approach. So then this is a purely judgment of the management, whether you are going to use capital approach or income approach. Mostly you are using income approach. Income approach. Why? What's the reason? The first paragraph. So the government grant shall be recognized in profit or loss and a systematic basis over the period in which the entity recognized an expense, and the cost for each grants are intended to compensate. What do you mean by that? To satisfy these conditions, you have to incur cost, right? Satisfy these conditions, you are supposed to incur a cost. To incur that cost, you will take another 5 years. 1, 2, 3, 4, 5. This 5 years, you are supposed to incur a cost to comply with that conditions, right? That's what it says. Government grant shall be recognized in profit or loss on systematic basis. On systematic basis. That systematic basis can be decided by the management. That's totally the management judgment. So that basis should be justifiable according to the expense pattern, commitment pattern, right? Commitment pattern. Order condition එකක් තියෙනවා මොනවද? SAP එකක් එක commitment එකක් තියෙනවා SAP එකක් වශයෙන්. මොකද commitment to delivery lectures and conducting exam and finally repeat. For that you have paid something. Either kind of a fee, maybe one-time payment or installment basis payment. The way they are recognizing revenue may be kind of a simple average method or kind of a different systematic basis. The systematic basis should be decided by the SAP according to the expense pattern. So that first year maybe very less amount, because in the first year we can conduct lectures by using internal lectures. So finally and the last year, it may be difficult, right? So we need to hire visiting lecturers and senior professors, and we need to incur more costs, right? So then the revenue recognition should be in line with that pattern, not straight line basis. That's what we are telling. So whatever the revenue you are recognizing, that should be in line with the related commitment, right? Related commitment. Last week we discussed this grant related to depreciable asset, grant related to non-depreciable asset. So then, if it is a depreciable asset, we can follow the same depreciation method to recognize it. Any utilization can be used to recognize one. And then grant related to non-depreciable asset. Again, we need to decide the basis. Income over the period in which the cost of meeting the obligation is incurred. That's important. Example. It's related to a land, right? Yeah. If a piece of land is granted on condition that building is erect on it, then the grant should be recognized as income over the building's life. Building's life. So then this is a grant related to non-depreciable asset because it's a land. Land එකක් හම්බ වෙනවා. Land එකට land එක හම්බ වෙන එකේ double entry එක මොකක්ද? Land account debit credit to gain account. That gain how can we recognize as a grant? So then that gain should be kind of a deferred income account we can put and recognize to the P&L according to the condition. Condition is what? Condition to erect the building in the land. So then you need to follow this, or else you can decide that. This is not a hard and fast rule, right? You can decide another set of kind of a pattern model, right? That model should be justifiable. Keep in mind that. You can understand that once you are doing question. Shall we do a question first? So I uploaded a set of questions. Shall we do question number 3 first? This one? That's also about the land. The Upton Private Limited was received a bare land from the government which is worth of 1 million. Worth means the fair value. Keep in mind the fair value of 1 million, right? As per the agreement with the government, Upton should develop a factory building in the ground within 5 years period. What's the condition? We need to develop a factory building, right? Within 5 years. So then, as per the contractor agreement, the percentage of completion was recorded as below. The proper accounting treatment for the grant was received from the government. What's the proper accounting treatment? What we need to do? We need to suggest that, right? So then you can suggest cost and income approach or the capital approach. Here, income approach may be good, right? Can suggest income approach can be used and the grant can be recognized to the P&L according to the percentage of completion. So then, can you recognize in the first year 1 million debit to 1 million debit to land account, 1 million debit to P&L? Can't recognize like this. අපිට මේ grant එක cash එකේ හම්බෙන්න ඕන නේද record කරන්න. අපි කතා කරේ නෑ. Receivable වෙන තැනදී recognize කරන්න. Right? So then we have kind of a proper plan, contract agreement, and everything is there. Now we can recognize the total grant, not the portion, right? Not the portion. Total 1 million can be recognized. So how you are going to recognize? You are 1 million recognize කරගන්න ඕන කියන්නේ. මේ land එක දැන් ඔයා පාවිච්චි කරනවා. නේද? මේ land එක ඔයා control කරනවා. So then you need to recognize that as asset. So then land account clear. Land account debit. Land debit 1 million. Debit. Credit where? Credit to. Credit to grant deferred revenue account. Deferred revenue account. Credit 1 million. 1 million. Right? So then, this is the basic entry. Take it under the plan. Deferred revenue account credit put into the asset account. So then, from the deferred revenue account, we need to recognize the current year portion to the P&L. Right? So then what you are going to do is, first year, we have a condition. To give that condition, we have completion rate 5%. So then we can use same pattern. So then you can recognize about 5% to the P&L. Deferred revenue account. Debit 1 million. 50,000, right? Grant income account. Credit 50,000. Grant income account P&L other income. Sir, P&L other income element. So then here we have disclosures. See? This topic. Grant related to the income are presented as a part of profit or loss, either separately under general headings such as other income, right? So under other income, you can disclose this grant income for the period. Correct? Okay. So then you know that 1 million there's a cash flow, cash inflow. So what we are going to do in the cash flow? Cash flow, the cash movement should be disclosed under a separate paragraph in the statement of cash flow. Separate paragraph. Keep in mind, you have to put a separate paragraph in the cash flow statement and the cash inflow. Keep in mind that. If you have a grant, there should be a separate paragraph in the cash flow. So then, if I ask in the exam to advise to some CFO about grants, these are the advices you're supposed to give. Your grant cash inflow should be recognized separately in the cash flow statement. You can recognize that as a other income element under P&L. and then keep the balance as a deferred income account as a liability. That's the way you need to suggest. Let's say grant related to expense, not asset. Grant related to expense, maybe some kind of incurred loss. The government will be volunteer and give that support to compensate that loss. So if you are going to compensate such kind of a things, as at the receivable point, you can recognize that as an income. There's no further commitment condition, right? The government grant that become receivable as compensation for the expenses or loss already incurred or for the purpose of giving immediate financial support to the entities with no future related cost shall be recognized in profit or loss of the period in which becomes receivable. What do you mean by that? What's the point we need to get? No future related cost. If you don't have future related cost, then you can recognize that for today. That may be kind of a cost reimbursement. Cost reimbursement. You have done a kind of a, let's say, what do you call that? Nearby your factory, you have kind of a drain system. You incur a cost and you clean that, right? Already you incurred. So kind of a compensation to you, government may give some amount of cash. There's no future any commitment. Now you have already incurred the condition, you have incurred the cost, no future commitments. Then only you can immediately recognize that it comes to the PNL. So then we need to defer. Why we are supposed to defer? If you are having future commitment, still we have not fulfilled the one condition. That's why we are going to defer, right? That's the reason we are supposed to defer that income. Not related to expense. I hope this is clear. So in the exam, you may have different options. The given question can include maybe grant related to a land or kind of a cash benefit or concessionary rate loan or type of expense. We have to decide what the exact accounting treatment. Grant related to expenses. This is again simple. Grant will be received as a kind of a non-monetary item. So then what we do, we need to recognize the fair value. Fair value. What do you mean by this statement? Monetary asset and the account for both grant and asset. Grant and asset should be fair value. Grant and asset should be fair value. You are getting a kind of vehicle. You are getting free vehicle from the government. Free vehicle from the government. You are not supposed to pay anything, right? You are not supposed to pay anything. Then you don't know the value yet. You don't know the value. What we are going to do? How we are going to recognize? Are we keeping that as an asset in our books? Yes. We are controlling that asset. And then what you have to do is you have to calculate the fair value. Fair value as per SLFRS 13, right? SLFRS 13. So then that fair value, SLFRS 13, we will learn within another 30 minutes. SLFRS 13, right? So how we are going to do the fair valuation? We'll learn within another 1 hour time, right? So then that value should be account, motorbike account, debit, maybe 500,000 motorbike account, and then grant account, deferred grant account, credit 500,000. That is called grant account. So then now you have a doubt whether how we are going to recognize this grant account. For this benefit, if you have condition for next 5 years, defer this for next 5 years, then recognize according to a pattern. So that's your judgment. So then how we are going to present that in the financial statement? That's important. Two things. Two approaches you can use. How we are going to present that in the financial statements. First one, by setting up the grant as a deferred income. By deducting the grant in arriving at the carrying amount of the asset. By setting up a grant as a deferred income means the way we have discussed. we recognize the grant as a deferred income account. It's a kind of a liability account, right? By deducting the grant in arriving at the carrying amount of the asset. Under this method, deducts the grant in calculating the carrying amount of the asset. The grant is recognizing profit or loss over the life of depreciable asset as a reduced depreciation expense. What do you mean by that? So then same impact. There's no two different impact. Same impact. You can decide that whether this method or this method. Let's say this is the motorbike. This is the grant. We are supposed to use this bike for next 5 years. Next 5 years. Next 5 years we are going to depreciate this. We are going to depreciate this. So then depreciation expense debit credit to this account. So then you are supposed to recognize the grant to the P&L. To the P&L, how much? If you are using 5 years, same amount. Deferred account debit credit to the P&L, other income. You can see 100,000 depreciation in one method, and other side is expense. Other side we have other income 100,000. P&L impact 0. P&L impact 0. So then you are recognizing depreciation in straight line method. Here we are going to recognize this grant in a different method. If it is so, this amount may be differs. You are recognizing depreciation 100,000. This may be 120,000 or 80,000. That depends on the grant recognition pattern you decide. Right? You can do the inline with the depreciation method because it's related to an asset. That's the ideal way. But here, second method, what we are going to do? You are going to disclose. We have this asset account. We have the asset account. And then you have the grant deferred income account. Grant deferred income account. Income account after recognizing this year portion. What you are going to do? You are going to deduct that from here. The balance will be displayed in the books. So then, whatever the depreciation and income account balance, true balance also net it off. This 2 also net it off to the P&L. So that's called by deducting the grant in arriving the carrying amount of the asset. So that you are going to disclose both. Once you are calculating the carrying amount of asset, what you are going to do? The grant amount will be deducted. So then that's an option. You can decide as a management the first method or the second method. Right. So this was discussed. So then related grant income should be recognized as other income in the books, right? And if you are having kind of a cash receipt, it should be disclosed as a separate line item. Separate line item means in the cash flow statement, we have 3 activities, right? Operating, investment, financing. That's grade 2 knowledge, right? So then other than that, we need to put a separate line item and mention this a separate cash inflow. right? That's the requirement. So then government grant is not a investment activity or the operating activity or the financing activity. It's another separate type of activity, right? Okay. Right. So then this type of some other factors also they are in the cash flow statement we need to disclose separately. If we are having kind of a uh, foreign currency conversion, that should be separately disclosed, right? So then we'll discuss in case 21. So then that's it about government grant per day calculation. We have some other questions. You can go through that. I will give them answers and we are having continuous assignments as well. So you can practice with this knowledge. So the recognition criteria and the basic measurement is measurement of the government grant. Maybe capital approach or income approach. Income approach should be decided based on the given condition, given commitments within the period of time. Right. So then again you should have kind of understanding to separate government grant from a government assistance. As I said last week, government grant there should be a specific cash inflow, a benefit inflow specific to that entity, right? Here actually a kind of economic benefit. There's no resource inflow, right? It's kind of a free technical advice, free marketing advice, a provision of guarantees, right? A government procurement policy that is responsible for the portion of the entity sales. Yeah. So those are the some kind of assistance, not a kind of a direct financial gain. It's a kind of a specific benefit to the entity. That benefit may be kind of an assistance, kind of a support. That's a specific support, not a kind of a general support. So then, to get this government assistance, again we have some kind of a criteria to eliminate. Keep in mind, to get this assistance, we need to fulfill some of the things. And so then that will be there will be some elements, some criteria to eligible for this government assistance scheme, right? So then these are the types, these are the example of government assistance. If you have type of a government assistance, what you have to do is you need to disclose that. You are not going to pass any double entries, right? එතකොට government assistance account එක debit credit කරලා නේද? debit කරන්න දන්නක් නෑ මම. ඒක තමයි කියන්නේ. but debit කරන්න free technical advice කියන්නේ මොකක්ද? අපි recognize කරගන්න තියෙන free technical advice කියලා asset එකක් create කරන්න. ඒක වැලේ කරන්නේ. debit කරලා තමයි credit කරන්නේ. useless වගේනේ substance එකකට. අපි asset එකක් create කරගත්තොත් නේද free marketing advice කියන්නේ. We don't have asset, we have created it. And then if you don't have asset in futuristic perspective, we need to have a right of no need to recognize it. It's just an assistant, it's a help, right? But we need to specifically disclose that in the books. Keep in mind. The small thing, government grant should be recognized. That should be accounted by using double entries. Government assistance in the just disclosure. And make a matter clear. So then that's the key learning point we have here. Government grant should be accounted by using double entries. We have capital method and income method. Government assistance can't be accounted as the government don't need to pass any action for that assistance. It's just a matter of making a disclose about that assistance. One of the disclosure about the assistance to the eligible criteria and then what the period that is eligible for this. So it's the information to the stakeholders. So the stakeholders are no, we are eligible for some kind of assistance from the government, the basic organization, then we can have some mobility. That is the right? Okay. That's about government assistance. For example, exam එකේ අනිවාර්යෙන් අහන්න පුළුවන් ප්‍රශ්න. Right? So that those three can be to give some example for government assistance, right? Highly possible questions. So then I mentioned this government assistance doesn't include this type of general, the infrastructure facilities given by the government, and then irrigation and water regulation process and communication network, the railway lines, highways, all those things you can't disclose in your books. What can go on there? Galle highway can also disclose that on. Keyword එකක් නැහැ. ඒක ස්පෙસિෆික් දෙයක් නෙවෙයි. කොහොමද ඒකට highway යනවා. ඒක ඇසෙට් එකක් විදිහට උසරට ගන්න කිව්වා ඩිස්ක්ලෝස් කරන්න නැත්නම් නෝ රේල්වේ ලයින් එකේ ඊගාට කියන්නේ. පොතේ ඩිස්ක්ලෝස් කරනවා. අපි ඊගාට රේල්වේ ලයින් එක යනවා. අපේ ඊගාට කරනවා. So keep in mind, there's a question like this. Can you consider? Here to ask it that here we have my trade system by the organization. So there is a manufacturing company. It's a benefit to the organization. So we need to mention that as the government assistance for doing it. Done. So kind of trade system is the basic from the government. It is not specific to that entity. While we manufacturing company is given by that is not the government assistance, right? What is physical monomer assistance right? You need to disclose. Keep in mind. Right? So the main criteria you know. What case study එකේ දෙන්නේ. එහෙම එකක් දෙනවා. CFO අහනවා මේක recognize කරගන්න පුළුවන්ද? ඊට පස්සේ මම ඊට වඩා ප්‍රශ්නයක් අහනවා. Why you are not going to recognize it? Why? ඒකත් explain කරන්න. You should be there to explain why. You can't say that this is in the standard. Standard clearly says that this type of general service you can recognize as assistance. You can't say like that. Standard එකේ කියන දේ ගන්න නම් secretary කෙනෙක් ගන්න account executive ගන්න නේ. You have to mention what's the reason they are telling that this type of common things you no need to disclose in the books. Basically, why? You can't control the train. It's not a asset for you. You are not controlling it. Wow, man. Train එක වට control කරන්න පුළුවන්ද? You can train යනවා ගේ ගාලා මොනවායි සද්දෙටත් ඇහැරෙනවා. මේ හැබැයි වට train එක යන වෙලාව තියෙන වෙලාවට එන්න කියන්න පුළුවන්ද? බෑ වට එන්න කියන්න බෑ. You are not controlling that asset. That's why you are not going to recognize it. What train එක කවදා හරි control කරන්න පුළුවන් නම් what asset එකක් recognize කරගන්න පුළුවන්. Right? That's why you are not going to recognize it. Are you okay? How is it accountability? Right. Okay, I hope you are clear about this. So then you are recognizing a grant. Suddenly, you are supposed to prepay it. What you are going to do there? Area practical activity. No what it is. As I have included here. You are recognizing the grant. Suddenly, you are not eligible to get that grant. You have to prepay it. How to recognize income recognize. Now you are not eligible to get the grant, government will request that more money from you. So then what are you going to do? You need to treat as a change in counting estimate. You need to treat as a counting estimate. Yes, you recognize this as a estimated pattern to the books. Estimated pattern to the book. So estimate. You need to treat that as an estimate change. If it is an estimate change as per case, what? 8. Case 8. The estimate change. You need to adjust that to the futuristic pattern. You need to adjust that onto the opening balance. You need to adjust that to the future balances. This is going to be treat according to the given criteria. So then you need no need to reassess. Not reassess. No need to restate your numbers. Assume that as estimate change and reverse that to from your account. So then this is again a kind of a challenge. If you recognize, if you satisfy with the 2 criteria above, here we have 2 criteria, right? These 2 criteria, after satisfying, you are going to recognize. So then that evaluation, there's a failure in that evaluation. That's why you are getting kind of a impact. After 3 years, you feel that this is not will be received, right? It's a matter of evaluating your criteria, right? You need to reverse that from the books. And then related disclosures. What are the disclosures? Grant related disclosures and then government assistance related disclosures. You need to mention your clear accounting policy, method of presentation, nature and extent, nature of the grant, conditions, and the method of presentation. Your recognition method, pattern, I will line with the asset depreciation method, percentage of completion of the contract. You have to mention the recognition method, accounting policy, capital method, or the income method. You need to mention that in the books. And then assistance. Assistant, you are not going to mention the double entries and the model of recognition. You just want to mention that indication of other forms of government assistance, fulfilled condition and other contingencies attached. Any contingencies, any related commitments, you need to mention that in the books to eligible for assistance or grant. So the same thing need to mention to the grant as well. Whatever the given contingency commitments for eligible to the grant. That's it. That's about government grants. We discussed about government definition and understood that what the grant is. And here we have government grant and assistance. Government assistance won't be counted, and government grant will be accounted by the structure methodology method. That should be decided by the management. And in the income method, we have to kind of a people variable count. And the recognition pattern will be decided by the future commitment. Future cost you are supposed to be certain to fulfill the condition, right? That should be met. Your grant recognition, grant income recognition criteria should be satisfied, should be justifiable by the management, to the audit, to the whatever stakeholder. So that's about the summary of government grant. Now you can start learning about government grant, right? I hope you are okay. So that is the highly possible area for the exam. So then I am continuously giving questions from this. You can practice. So the ultimate objective is to you have to very familiar with this type of technical things. Right. So we are moving to a very important standard, SLFRS 13. 13 करना तो 8 करना. हाँ करना तो है. यदि मानना होगा we are supposed to learn करेंगे. Yes, we do 13. Time කරන්න කියන හැටි. ඔයා වැඩි ඕනේ නැහැ මගේ කියලා හිතන කට්ටිය. Example again. Example later. If you are getting a vehicle, let's say this is not valid for if you are getting a land, right? Land is supposed to do depreciation. If you are getting a P asset, supposed to do depreciation, right? Let's say whatever asset you are getting a you may be gifted one building, maybe one building, right? One building you were gifted. So then that building account debit 5 million. Grant account credit 5 million. Right? Building 40 years depreciation. 40 years depreciation. If we are using this 40 years method for building depreciation and grant recognition, there's no difference between the grant income to the period and depreciation expense to the period. That's same. Why? The same amount you are recognizing fair value of the building, debit to the asset account, credit to the grant account. This is the total income, right? We are supposed to recognize within these 40 years. We are using straight line method for this grant income. So then one period for year 1 and year 2 and year 40. Year 40 depreciation expense equal to grant income. whatever the year, depreciation expense equal to the grant given. Right? Let's say that is the method you have to use according to the standard in line with the depreciation method in line with the asset. But management can decide to recognize this grant by using different method, different criteria related method, right? So then that method may vary with the depreciation method. According to that method, first year you are going to recognize type of 5%. Second year, 10%. Third year, 2.5%. 40 year, 10%. Different years, different percentages. All together equal to 100%. So then you depreciate the building straight line method. You recognize the grant in a different method. It is so. If you are getting a 1 year, your depreciation expense may differ with the grant income. Yes, right? That's what I told. Yes, they are maybe different. SLFRS 13 is a very important standard, right? So then we are supposed to learn this standard because very common standard for other many standards, right? Some of the standard is required to use fair valuation. There's no option. Some of the standards they are giving kind of option to use fair valuation or post model. It is so you need to follow this standard. Here we are discussing how we are going to do fair valuation. What are the methods? And after doing the fair valuation, how we are going to disclose it? How we are going to decide whether it's a level 1 valuation or level 2 valuation, level 3 valuation? What are the criteria? So then, if you are lacking with information, how you are going to do your model validation? What are the inputs you are using? If you are using kind of a model, cash flow valuation model, what are the things you are supposed to disclose, right? If you have kind of a market, whether it's an active market or not, you need to decide it. How we are going to decide it? Need to clarify. If you have a market, is that the principal market? You can decide it. How we are going to identify the principal market of an item. And then, if you don't have a principal market, how we are going to decide the most advantageous market? So then, you should have a clear understanding to decide all those factors. So then, the evaluation is a critical area. So then, that's the area your judgment is really vital. You should be there to decide the method, inputs, and you have to do the calculation and reevaluation, and then you are supposed to disclose this in the financial statement, and parallelly, fair value gain or loss should be recognized to the P&L, right? According to that recognition criteria, that gain or loss may be eligible for tax, right? May not be eligible for tax. Then it will create the temporary difference. Temporary difference. What do you mean by that? Deferred tax දන්නව කියලා හිතනවා. දන්නවනේ. Deferred tax. ඒ lesson එක නෑ, ඒ standard එක නෑ අපේ syllabus එකේ. Right? So then fair value gain or loss, if you are having a kind of fair valuation, whatever the book value you had and the fair valued amount should be cross-checked, and the gain difference should be recognized. That difference may be a gain or loss, and then that gain or loss should be recorded in the books. So the once you recognize that in the books, it will include the P&L, right? Profit or loss account. And then once you account in that, definitely that will impact to your profitability, right? So then we have a question. According to the profitability, you're supposed to pay tax. So then your accounting profit should be turned to taxable profit. Taxable profit. Accounting profit to taxable profit. Because they can't take up. They can't take up here. So then why we are getting two different answers for profit calculation, accounting profit versus tax profit. I can have any different accounting profit be calculated as per accounting standards, right? Accounting standards. Tax profit calculated as per tax regulation. Status in the revenue income tax regulation, right? So there are two different regulations. These two different regulations having different calculations for profit. Right? So then if you have a country having a tax system, they're supposed to pay taxes on accounting profit. So that's a very simple method, right? In such kind of a country, we don't have deferred tax standards. We have deferred tax standard, there's no implication. We don't have deferred tax. Why? Accounting profit equal to the tax profit. Some countries, they don't have taxes. If it is so, we don't have deferred tax. Two scenarios. Some of the countries, they are not using deferred tax. One is tax law totally match with the accounting standard. If it is so, no deferred tax. Some countries, they don't have taxes. If it is so, we don't have deferred tax. Those are the two scenarios. So the country having very simple taxation in Sri Lanka, we are having so complex deferred taxation. So then you can do accounting, but identification, deferred tax into income tax. Deferred tax may be the complex part. Right? Calculation the deferred taxation. So then your requirement should be there, your support should be there to organization to calculate deferred tax and convince that tax gain or loss to the board audit committee and to the whatever the quorum. That's your presence. How to justify your deferred tax liability and the asset, right? So then here we discuss difference, right? May profit එකයි difference වෙනවා. Triple එක තේරෙනවා. මොකද මේ profit එකේ entertainment expenses අඩු කරන්න දෙන්නේ නැහැ. Here we deducting the entertainment expense. Here we are not deducting bonus provision. Right? මේක දෙනවා bonus provision එක අඩු කරලා. Gratuity provision එක දෙන්නේ නැහැ. මේක දෙනවා. මේක depreciation දෙන්නේ නැහැ. මේක දෙනවා. Because of that, because of different reasons, these two profit numbers getting changed, right? So then these changes, if we are putting kind of a list of changes, different changes, let's say this profit may be 40 million, this profit may be 55 million. I am make out करे. Make sale of provision දාලා තියෙනවා. මේක provision වලට දෙන්නේ. ඒක නිසා මේක සාමාන්‍යයෙන් සහායයි. For this difference, we may have two type of differences. Two type of differences. What are they? Type there differences තියෙනවා. මොනවද කියන්නේ බලන්න. අහන්න. Get what? Oh. A differences carry දෙකයි. Permanent differences සහ temporary differences. Permanent differences and temporary differences. මේ difference එක permanent. මේ difference එක temporary. What do you mean by that? Permanent difference and temporary difference. May 40, 55 difference එක 15. A difference එක there may be permanent differences and the temporary differences. මේ difference එකෙන් 5 permanent 10 temporary. 5 permanent 10 temporary. Difference එකක් temporary. Difference එකක් තියෙනවා. ඔයා කළුයි මං සුදුයි. හොඳ ක්‍රීම් ටිකක් ගෑවම සුදු කළු වෙලා යනවා කළු සුදු වෙලා යනවා. ඒක මොකද්ද? Temporary difference. Permanent difference වෙන්නේ මොනවද වෙන්නේ? ඔයා හොඳයිද? good qualities තියෙනවද? good qualities ක්‍රීම් ගාලා වෙනස් කරන්න බැහැ. ඒක මොකද්ද? That's a permanent difference. ඒක inbuilt. ඒක forever guaranteed, right? ඒක මුකුත් කරලා වෙනස් කරන්න බෑ. If it is a permanent difference. Some of the differences permanent, some of the differences temporary. Yes. So then what are the examples? Entertainment expense is a permanent difference. Why? Entertainment expense, permanent difference. So that we can deduct from here, we can't deduct from here. In another 10 years time, we can't deduct. Forever, we can't deduct. Right? We don't need to, we don't have any possibility to deduct it. It's a permanent difference. Right? But debtor provision, you can deduct here, you can't deduct here. Can't. But debtor write-off you can deduct. Bonus provision. Let's say gratuity provision. Make it no. You can't deduct from here, right? Is a temporary difference. Gratuity provision. Why? Gratuity payment you can deduct from tax. Right? You can deduct from tax. Once you are paying gratuity, you can deduct from tax. Here, upfront you recognize a provision. 50,000 provision. You can't deduct it for this year. So then for this year, there's no any expense from gratuity. right? So then after 3 years, there's a employment resignation. So then now we are paying gratuity. Once you're paying gratuity, in accounting, what's the entry? Cash credit, debit to this provision account. There's no P&L impact. There's no impact to the profit in this year, that year. But that payment, you can deduct from the tax profit. So then first year is a difference. But after 3 years, that difference will be realized. That's a temporary difference. Temporary difference for 3 years. Tax profit gets changed from the accounting profit within this 3 year period. Short term purpose, it's difference. After 3 years, it's same. So then we deducted 50,000 provision in 2021. Taxable profit 2023, we deducted it. As a whole, it's a temporary difference. Are you getting what I'm saying? For income tax, depreciation can't be deducted, but capital allowance can be deducted. Capital allowance is a percentage, it's also a percentage. At 2 percentages, we recover the total asset. So then, if it is 20% versus 25%, 20% versus 25%, within 5 years, accounting depreciation will be charged to the BSAA. 25% for taxation means 25% capital allowance means you will get that within another 4 years time. So then 4 year to 5 year, it's a temporary difference, right? What I want to tell is, if there's a fair value gain or loss, taxation may not allow the deduct it or add back. The fair valuation gain, the provision type of thing, is estimate, right? Fair value gain may not be taxed. Fair value loss may not be a deductible expense. It's creating a temporary difference, because once you are realizing that gain, once you are getting impact, the real loss can deduct that. Right? Once you are having the real gain, at that point it will be taxed. So there is a kind of temporary difference. Whatever the temporary difference, you need to book your deferred tax. Whatever the temporary difference, you need to book deferred tax. We have two types. It may be taxable temporary difference or deductible temporary difference. For taxable temporary difference, you have to book a deferred tax liability. A deductible temporary difference, you have to book deferred tax asset. That's how we are having deferred tax asset and a deferred tax liability. Deferred tax asset and a deferred tax. How deferred tax liability? අපි deferred tax කරන්නේ කියලා. Why you have to be deferred tax? As a accountant, you should feel that, you should understand that it is really logical to do deferred tax because it's temporary difference. Why? If you are recognizing expense today, as the accounting term, but eligible for some kind of a deduction in future. Right? Deduction in future. It's a benefit because of today's expense. You are today recognizing expense, right? Today you are recognizing expense. It means you are giving cash out, cash credit, debit to the expense account. Right? Debit to the expense account. maybe electricity expense or type of salary expense or entertainment expense, whatever the expense will be. Today you are incurring a cost. So that if you are once you are incurring a cost, imagine that in another 3 years' time, you are eligible for some benefit from taxation. It is so. Today you have recognized that benefit. ඒ benefit එක recognize කරගන්න ඕනවා. ඒ expense එකේ outflow එක recognize කරගන්නකොටම benefit එක recognize කරගන්න. That's why we are having deferred tax. It's not understood. Right? Imagine that තියෙන එකක් තමයි solar power ගත්තොත්. නේද? ඔයාලා income tax එකෙන් deduct කරගන්න පුළුවන්. Right? So then solar power cost cash credit. Cash credit අපිට solar power cost එක asset එකක් නෙවෙයි. Cash credit debit to the P&L. Right? Debit to the P&L. ඔයාගේ other accounting profit එක 10,000 වලින් deduct වෙනවා. But in future, you have a benefit to reduce that your tax expense. If it is so, that benefit, today you have that benefit, eligible for that benefit. Today, with this expense, you need to recognize the deferred tax. Right? You need to recognize the deferred tax. Whatever the gain should be recognized. So then, whatever the eligible number, let's say, for the solar, 100% we can deduct. Don't need to know the multiply with the tax. එක ආගේ taxable income එකෙන් නෙවෙයි solar අඩු කරගන්න. කොහෙන්ද අඩු කරගන්නේ? tax liability. එතකොට කියන්නේ මොකද්ද? solar වලට spend කරොත් වාගේ 100% recover කරගන්න. නැත්නම් වා නිකන් දැන් government එකේ donation එකක් දුන්නා නම් government එකේ donation එකක් දුන්නා වාට අඩු වෙන්නේ tax rate එක. 30% maybe, 36%, 6%, right? Tax rate එකේ. ඒක allowable deduction එක. deduct කරන එක rate එකෙන් percentage එකකින් අඩුයි. ඒ විදිහට තේරෙන්නේ නැත්නම් අමතක කරලා. Right? So I want to emphasize that you need to feel why we should do deferred taxation. Why? If we are doing kind of an expense today, we are recognizing that expense. We are eligible for some kind of a benefit. Today it should be recognized. එතකොට ආ expense එක recognize කරනකොට double entry එක මොකක්ද? expense එක recognize කරනකොට double entry එක cash credit 10,000. Expense debit 10,000. You know this entry. Because of that, we will be eligible for some other benefit another 5 years time. That benefit, this will be considered as the eligible deduction from taxation. Today it is not deductible. Next year or within another 5 years, it will be deducted. Once you are deducting that from a tax calculation, let's say X amount tax, you are going to deduct 10,000 within another 5 years time, right? Keep focus, listen and understand this. 5 years time, you are eligible for 10,000 deduction. And once you are deducting that, you are arriving to one number. After deducting this, you are liable to pay tax on this 30% on this amount, right? And then now you can see that within another 5 years time, you have 10,000 into 30%. It means 3,000 benefit in 3 years time, maybe 5 years time. Are you okay with this? What 10,000 මෙතන අඩු කරේ නැත්නම් වා ඊට වඩා tax ගෙවන්න. වා මෙතන benefit එක කෙනෙක් තේරෙන්නේ නැත්නම් ඒක accounting ප්‍රශ්නයක්. මෙතන amount එක කියලා දෙන්නවා. Let's say taxable profit 100,000 X, right? You are eligible for 10,000 deduction because of this expense. Now your taxable profit 90,000. You are paying 30% into 90,000. 21,000, right? If you don't have this 10,000, you have to pay 30,000. What's the benefit? 9,000. 9,000. 9,000, no. 3,000, right? So there is a benefit. This benefit, today we have to record. Today we have to record. We have to estimate this benefit and please record today. What's the double entry you are going to put? This is a deductible temporary difference. Deductible temporary difference, you have recognized the deferred tax asset. Deferred tax asset. So then deferred tax asset account debit. How much? Let's say 9,000. Deferred tax asset account debit 9,000. Tax expense. Tax expense credit 9,000. Tax expense credit 9,000. Company ඕනම company එක ගෙවන tax එකයි tax expense එකයි වෙනස්. ගෙවන tax එකයි tax expense එකයි වෙනස්. යාළුවෙක් කැලිලා ඇහුවොත් මේ company එකක් දුන්නවා tax expense එකයි ගෙවන tax එකයි වෙනස් කියලා. The tax expense will be a difference in the tax amount you are going to pay. The reason. The reason is the different tax impact. Different tax impact is the reason. Different tax impact is the reason. Tax expense guy. Tax expense guy. Given a tax guy difference in the reason is the deferred tax expense. Deferred tax impact. Once you are having a deferred tax impact, definitely your tax payment differs with the tax expense. Tax expense is calculated based on the accounting regulation. Accounting regulation. Accounting side, what are the all tax benefit, all tax expense, net represent the tax expense in the BSAA. That is composite with the deferred tax plus tax. Right. Whatever the P&L. So then through deferred tax entry, whatever the tax expense, tax payment turn to accounting terms. Then මේ taxable profit එකට හදපු එක. Taxable profit එකට tax liability එක හදලා නේද? 55 වලට tax එක 30% කියලා cal කරලා මේ amount එක entry කරොත් කොහොමද? Counting. Taxable profit එක 55. 30% tax rate එක. So they simple. 30% into 55, we have a tax expense, cash credit tax expense, debit to tax expense account. Main tax expense account එක දාපි P&L එකේ tax expense කියලා පෙන්නන. නෑ. ඒක පෙන්නනොත් මොකද? මේක ලොකු වැරද්දක්. It's a huge mistake. Why? This was calculated based on a separate regulation. This tax expense, whatever the expense you paid to the Internal Revenue Department, cash credit debit to tax, that should be changed to the accounting terms. To change that expense to the accounting terms, we have to put the entry that is called a deferred tax entry. That entry composite with deferred tax liability entry and the asset entry. The net impact should be included to the tax expense. Altogether, we consider as a tax expense in the P&L. Keep in mind. That's really important. Accounting P&L එකක් රීඩ් කරනකොට effective tax rate එක කියන්නේ මොකක්ද? Tax expense එක කියන්නේ මොකක්ද? Deferred tax impact එක කියන්නේ මොකක්ද? Those are really important factors. Right? This is not about fair valuation. This is irrelevant for your syllabus. Right? Irrelevant for your syllabus. Just to understanding and just to have kind of a basic understanding about deferred tax. Right? Why I'm telling treat it like this, deferred tax is a kind of area people are not getting correctly, right? So then always they are missing deferred tax entries in the financial statement, right? They are missing many deferred tax treatments. So then as an accountant, you need to focus about deferred tax treatments and implications. Keep in mind, right? So then going back to the session, topic, it's about fair valuation. And here, as I said, we have set of standards, fair value for measurement. These are the standards, permits, the option, right? SLFRS requires fair value for measurement. These standards. So then 16, 40 and 38. 16, PP&E, 40, investment property, 38, intangible assets, right? It permits. It's an option. It's not a must. You can use cost model or the fair valuation model, right? Cost model or fair valuation model. SLFRS requires, it's a must. You need to do fair valuation as per SLFRS 9. SLFRS 9. SLFRS 3. SLFRS 5. LKS 41. Right? SLFRS 9. What it says? SLFRS 9. SLFRS 9 clearly says SLFRS 9 all about financial instruments, right? Financial instruments. Financial instruments. So we're supposed to discuss this standard, SLFRS 9. Financial instruments. Financial instrument can be divided into two. What are they? Financial assets and financial liabilities. Financial asset and financial liabilities. Financial asset. You may have three types of financial asset. Maybe equity instrument, maybe debt instrument, maybe derivatives. Derivatives. Financial asset, maybe equity, maybe debt, maybe derivatives. Right. මේව තමයි financial market එකේ තියෙන instrument. ඕනම දෙයක් මේකට දාන්න. Once you are investing, once you are having in the financial market, whatever the instrument, you can, it may be an equity item or it may be a debt item or it may be a derivative. So then, what are the instruments you have? What are the assets you have in the market? Maybe FD, saving, commercial paper, stocks, or maybe treasury bill, treasury bond, commercial papers, and then what else? Debentures. You may have different financial assets you can invest. plus derivatives, forward contracts, options, futures, swap agreements, right? So then you can categorize that to these buckets. Stocks, shares, debt instrument, debentures, treasury bill, treasury bond, commercial papers, and then FD, and then savings, derivatives, futures, options, swap, forward contracts. You may have list, right? In the market, you may have different financial assets. Whatever the financial asset, you can put these three buckets. It may be equity, derivative, right? Derivative. Whatever the asset, you need to have kind of understanding about the asset features and cash flow patterns, and accordingly you have to decide your measurable derivative. And it was not a prediction. Again, different මේ බැන්ඩ් එකට හොඳටම පේපරේ හදන්න හිතාගෙන ඉඳි දැම්මම හදන්න පටන් ගන්න තියෙනවා. දැන් ඔයගොල්ලන්ට හොඳට පේපරේ දෙන්න. අපිට තමයි රියල් වැලියු එක දෙන්න ඕන ළමයි. ඒ කියන්නේ හાર્ඩ් ටයිප් එකක් දෙන්න මට බලාපොරොත්තු වෙන්නත් නැහැ. ඒ කියන්නේ පනිෂ්මන්ට් එකක් දෙන්න. While practical with yes, your intention is to have kind of a real accountant. To real accountant, we have to have that skill and intent, and you need to do a impact to the whole organization, society. That's the whole intent. If you are giving kind of very straightforward things, nothing to learn, nothing to change. Okay, so then we have set of assets in organization. That's why this is really important standard 9. So that we are discussing what we are discussing here, the relationship as far as 13 versus 9. 13 versus 9. So then here we have set of assets and set of liabilities. Set of assets. Set of assets need to be measured in different ways. That measurement basis will be decided after doing 2 tests. First one called cash flow characteristic test. Cash flow characteristic test. Cash flow characteristic test. First test. The financial instrument ගොඩාක් තියෙනවා. ඒක මුලින්ම මොකක්ද කරන්න ඕන? We need to do a testing. First test we call as cash flow characteristic test. cash flow characteristic test. So then, if you are getting fast, to this test, what about A level then? A level need test O level pass and A level. So the first test pass. So then you have a second test. What is that? Second test. එකට කියන මොකක් කියලාද? Business model test එක කියලා. First test and the second test is a business model test. Business model test. According to business model test, we have categorized into three different buckets. According to the business model, you can divide this instrument for three different buckets. Right? Some of the instrument, according to the business model, you are keeping that till the maturity. Right? Some of the instrument, you are not keeping till the maturity. You supposed to trade that, whatever the possible instance. You are keeping that for trading purpose. Some of the instrument, you are keeping some time, like the maturity period 8 years. You are keeping 5 years. After 5 years, you are planning to sell it out. Different objectives through the business model. That depends on your business model. Right? Accordingly, we decide your measurement method. Some of the items, instruments you are keeping till the maturity, you have to use amortized cost, and the asset you are keeping for trading purpose, you value fair value. If you are keeping asset, sometime for some period we are keeping, and then we are planning trading, again fair value. Amortized cost, fair value. Then we have two fair values here. One is fair value, whatever the gain or loss, you need to record to the P&L. Fair value. Fair value. Fair value. That's why we are here. 9. You need to fair value. After getting the fair value, as I discussed, whatever the gain or loss, how we are going to recognize whether it's the P&L or OCI. Fair value through P&L, fair value through OCI. Financial asset measured at amortized cost. Financial asset measured at fair value through OCI. Financial asset measured at fair value through P&L. We have three types of assets. So these are the fast cash flow characteristic test, fast asset used for the business model test. We have failed asset. We not consider for the amortized cost. All are fair value. We need to do fair valuation. Right? We need to do fair valuation. This fair valuation may be P&L or OCI. We have that option also. Management to decide, right? We'll discuss later in detail in financial instrument lesson how we are going to get the option, right? And then this two tests we have, right? Two tests, cash flow characteristic test and the business model test. We need to know what it is. Cash flow characteristic test. We need to evaluate cash flow characters. Can you determine the futuristic cash flows? That's the test you are going to do. Can we predetermine future cash flows? Future cash flows in the sense capital and the interest. Can you decide? Can you predict future cash flows? This is the test. So whatever the debt instrument, you can decide this. Other than debt instrument, we can say that derivatives and stocks, cash flow characteristics test fail. This fail. No need to do the business model test for equity and the derivatives. We can give kind of a direct conclusion. Equity and derivatives, cash flow characteristics test fail. We need to do only for the business model test for debt instruments only. Why? Only debt instruments we are getting fast result for the cash flow characteristic test. Why? Only debt instruments we can determine the future cash flows. But future cash flow determine what make debt instruments. Yes, definitely. For FD, can you determine the future interest and the capital? Yes, you can determine. First year, 10,000. Second year, 10,000. Third year, 10,000 plus the capital. This is the future cash flow pattern. This is past. Whatever the debt instrument, you can decide your futuristic cash flow pattern. If it is so, you are having the past result. For stocks, can you determine the future cash flows? Can't. Your dividend may be changed. Your capital gain may be changed. It's really difficult to determine futuristic cash flow for the stocks. Derivatives, it's really difficult, more than the stock. Because the derivative price will be changed to kind of a separate asset. That's called a derivative, right? So then derivative cash flows can't be determined previously. We can't predict. Then it is again failed. So then two tests will be done only for the debt instruments. If you are having failed answer, you have to do fair value. If you are having pass answer, again you have to do fair value for two instances. One is not fair value, that's amortized cost. Amortized cost will be discussed later. And then fair value determination will be discussed here. That's the link between IFRS 9 and the 30. Right. For the why I have done this here, because we have to discuss this lesson in your future. Once you are discussing, it is not a new thing for you. Again, I am repeating myself at that point. So then again, you are hearing, you are getting this twice, right? That's why I have given this as a kind of a summary. Right, SLFRS 3, 5, SLFRS 3 business combination, right? Business combination we are discussing. Once you are doing goodwill calculation, how we are going to do fair valuation? We are discussing 5 discontinued operation. We need to do fair valuation and LKS 41. LKS 41 we need to discuss and complete, right? So we have already completed that. 41 ethical. Ethical standard we have already done, right? Yes. So then that standard we mentioned that we have consumable biological asset, biological asset, and the valuation method fair value. Fair value plus cost to sell. That fair value should be measured by using this standard. That's why we are telling it's a requirement. It's required. Okay. So then red colored para important. Provide a single source of guidance for fair value measurement where it is required by a reporting standard rather than it being spread through several reporting standards. That's why we are having fair value standard. So then report 2014 actually we had a kind of a gray area. How we are going to do that? What are the measurement bases? How we are going to disclose? All those things. It's a kind of a gray area. So that's why people did different disclosures, different methods, and follow different techniques. So then, to reduce that complexity, we want to have kind of a single source of truth to do evaluation. That's why we are having a syllabus 30. So this is a single guideline. So whatever the standard, you want to refer this, definitely you need to follow this standard for peer evaluation. Again, we have some of the standard, they have not considered this standard. You need to clearly identify with all those things. Measurement disclose exemptions. Is scope exclusion. So then some of the standard they do peer evaluation, but they are not supposed to use SLFRS 13. That's important. SLFRS 2, share-based payment. Share-based payment. Share-based payment කියලා මොනවද දන්නවද? Share-based payments. We have a separate standard, SLFRS 2. Under share-based payment, we have equity settled share-based payment and the cash settled share-based payment, right? There we are discussing fair valuation. So the standard itself is clearly mentioned the fair valuation method. Because of that, we are not going to use SLFRS 13, right? Keep in mind, fair valuation in share-based payments, we are not referring 13. Right? Why? It may be more complex, right? Very specific methods may be there. By using general method, we can't do that. If it is so complex, definitely standard should be give specific guideline. If it is so, we need to comply with that. Because of that, SLFRS 2 has given specific guideline to do fair evaluation. As a result of that, we are not going to use the general guideline. That's why we are not using SLFRS 13. So then you need to have kind of an answer for why, right? You need to explain that. Leasing transaction, SLFRS 16. 16, they do kind of a fair evaluation for right of use asset. Right of use asset calculation by using incremental borrowing rate. You do kind of a model validation, forecasting and cash flow present valuation and calculate the right of use asset. I'll get it. So then right of use asset. SLFRS 16. 16 is one of the good standard. It is supposed to include this measure. 16 or another payment. 16 right of use asset. You calculate right of use asset for the operating lease. So you need to forecast, you need to present value, you can speak rental percent. Again, kind of a fair evaluation. So the standard itself is giving the guidance how they do this, how do we need to follow. Then again we don't need to follow 13. And net realizable value, case 2, right? Value in use 36. 36, what standard? Value in use 36, impairment standard. Impairment standard clearly says you need to do impairment if your book value is less than the recoverable value. Once you are calculating recoverable value, you have two options. What is that? Value in use and fair value less cost to sell. And fair value less cost to sell. Once you are calculating value in use, it's a kind of a forecast, a kind of a fair valuation. For that, we don't need to use that. Why? Standard itself clearly in the guideline. In case 2, ගෙදර වගේ standard එකක් නේ. Inventory. නේ. Yes. Cost and NRV, whichever is lower. Cost and NRV. We have discussed this. Once you are getting NRV, then realizable value is a kind of a forecasted figure. It's a kind of a market value. It's kind of a fair value, right? So the way how to measure that is to itself giving the guideline. No need to use reference learning. That's why we can say that measurement and disclosure exemptions. We can exempt from measurement and disclosure perspective of these areas, right? This is same. Disclosure exemption only, not measurement. Disclosure measurement on the exemption only. Plan asset at fair value, LKS 19. Retirement benefit plan investment at fair value, LKS 26. Fair value less cost to sell under LKS 36. Fair value less cost to sell. Then make a critical there. LKS 36 වල LKS 36 වල 36 වල we have two elements. Value in use, fair value less cost to sell. For value in use, to measurement and disclosure, both we don't need to use 13, right? We don't need to use 13. Value in use, calculation, we don't need to use 13. For measurement and disclosure, both. Fair value less cost to sell, fair valuation, fair value less cost to sell under LKS 36. Only for disclosures, but measurement need to follow the LKS 13. Measurement you have to follow LKS 13, and no need to do disclosures as per 13. You need to follow 36 disclosures. Here we are coming to the definition. Definition clearly says, we discussed this last week. Not in the last week, previously also discussed, once I discussed in 41, and then government grants. Yes, that's a pretty complex and very meaningful definition, right? So then we were lacking with this type of definition previously. Fortunately, now we have this definition. It's very meaningful, right? Each and every word, you should have a definition, evaluation. The price that would be received to sell an asset, to pay to transfer liability in an orderly transaction between market participants at a measurement date. Now we are going to discuss about each and every word. This is a definition you should know, like your name, like your surname. What do you mean by evaluation? Is the price could be received to sell an asset or paid to a transfer liability in an orderly transaction between market participant and a measurement date. That's the definition, right? It's an exit price. The price would be received to sell an asset or paid to transfer liability. It should be exit price. It's not be kind of a estimated price. The exit price. As at that date, that should be there, right? And market participants mean buyer and seller. Buyer and seller. Principal market or the most advantageous market for the asset or liability having all the characteristics below, that party should have independent, knowledgeable, able to do the transaction and willing to do the transaction. There is no such any influence and undue influence. It's a kind of a pure, genuine transaction in the knowledge. The market participant, buyer and the seller, they have a proper understanding about the transaction. Having that understanding, right, going to do the transaction. That is called the fair value. So then this third bullet point may be tested in the exam. As the market participant, what are the characteristics, what are the areas fulfilling as the market participant? How they are. What do you mean by that? As a market participant, market transaction is done for that. All this is available in the plan. Need to be independent from the parties. Independent actor. You are doing your transaction with whom? You are selling a building or land. You are selling a building or land to your brother or sister, right? To your brother or sister. So then that value is not a value. Why? You are not independent. And then knowledgeable. What I mean, definition different market. How to put it? I don't know. We are must actually in the engine so then you will get the same power with a separate engine. That gets going for a kind of transaction without having the knowledge. But knowledge didn't get a transaction. So then what knowledge is getting somewhere, knowledge is having transaction knowledge. The farmers is not easy. Farmers is easy. Business become matter. Rather than that, you can't get the direct benefits from farmers without having the knowledge. For that particular, you have to start a doctor, you are getting kind of prescription. It's subject to the pharmacy and you are getting that. That's it. Water. So the base can give you, or the is going to do it. Able to transact. What you mean by that? The market participants, this buyer and seller, should have a kind of a ability to do the transaction. What do you mean by that? So the people can use their price, but they have kind of a capability. Without that, they are giving, they are promising prices and we ensure they are value. They are balanced their prices and they are value. And they do the transaction. And they are willing to do the transaction. And the law may transaction occur. No, you don't have a kind of intent or interest to do the transaction. If it is so, it is not a value. What are the examples? Let's say we don't have any market here to buy vehicles, right? Buy vehicles. But now they are importing electric vehicles, right? So we don't have brand new vehicles. We are not willing to buy a vehicle, but unfortunately, for the situationally, we are planning to get a vehicle. So because of that, you are not interested to pay the fair value. Because You are not having kind of a feeling, kind of a interest to do the transaction. There's a kind of another factor will impact to the transaction. The transaction should be kind of a pure, genuine transaction. That price should be reflected to your interest. That is called the fair value. Or pressure එකකින් නම් කරන්න transaction. ඒක fair value එකක් නෙමෙයි. ඔයාට කියනවා land එකක්. දැන් ඔයා මැරි කරන්න ඉන්නේ. එහෙම නෙමෙයි. වෙඩින් එක ගන්න ඕන 5 star hotel එකක. නැත්නම් නේ සමාජයට ඕන දෙනවා. මැරි කරන family එකට තමයි brand කරන්න ඕන. එහා ගෙදර වෙඩින් එක ගත්තේ 5 star එක මම පුළුවන් නම් 6 star එක හරි 7 star එක හරි නැත්නම් මේ වෙසල් එක හරි ගන්න ඕන. Port City එකේ SL එක වෙඩින් එක ගන්නවා. තමයි plan කරන්නේ. So then what you're going to do? So then you have just to complete your degree and then wedding is natural. And after that, your very good wedding is done. There's a high pressure to get the wedding. So then what you're going to do? You are supposed to tell your some of the land you had to your parents. Then what? Wedding is a master guy. Other people are not down to buy it. So then you have a pressure. You have additional pressure. Or then you can purchase 1 million here. 1 million here is the purchase. Then what give to people only 500,000 people are there. So then that is not a fair value. So then you have that intent, you have that knowledge, but there's another type of a push pressure. That is not the fair value of the land. That was generated, that was created. That transaction, you are billing, but the buyer also billing. The billing parties are there. You have the knowledge. What knowledge is degree can tell them. Eight thousand lacking knowledge can take a tradition making up. Again, better and the master lacking a theorem. Facebook in decision theorem. So then, yeah, supposed to do the same thing, right? It's about a trend a surprises set up. So then you need to know that that is not the fair value, it's not a real deal, real transaction, right? Okay. So then once you are having a transaction, if you want to get that real fair value, you have to have the knowledge and the willingness, and you should have kind of capability. And then otherwise, if you have that, if I am the setter of this standard, I am supposed to put like there should be a real ownership of that land. What that land is, parents of that is not a big thing. Nothing else. Anything that's anything. You don't have kind of a commitment, and the value of that asset you don't have kind of a feeling. That is, if you have that feeling, you are not giving that to the outsider for 1,500,000 because you don't have that, the real value. You don't have real commitment towards that asset. Why? Okay, that's the amount of that commitment. No. Parents la සම්පූර්ණයෙන්ම use කරලා develop වෙන්න. develop වෙන්න නෙමෙයි. මේ නැති කරගන්න දාන්න. ඒ ආව නැති කරගන්න trend එකේදී they are doing transaction but they are not using the fair value. They are selling some things. That is not the fair value. So then fair value is the value. You can get that from the principal market or the most advantageous market. So these two words are really important. Principal market and the most advantage. First, you have to give the priority for the principal market and the most advantage. If you can't search the principal market for that item, you have to go to the advantages market. That two definitions will be discussed later. Principal market and the most advantage. And for one kilo sugar, what's the fair value? But අග්ගාර කණේට දුවන කියලා කියනවා ඊල්ස් එකේ මේ ගන්න මේක තමයි fair value. එහෙම කියන්න පුළුවන්ද? That's the question. You can't do that. You have to go to the principal market. Now what principal market එක යන්නේ? මොකද මේ සීනි කියලා එකක් ගන්න principal market එක හොයාගන්න. ඔය යනකොට කොහොමද principal market එක? So they tell you the petty cardinal or the targets or the keys or the supermarket or kind of Sunday fair was different. Locations may be there. So 1 kilo. So then what is the principal market? Really difficult to identify the principal market. If it is so, what we have to do? We have to identify the most advantageous markets. How we are going to identify the most advantageous? So then the aspect research. Yeah. So then to identify the principal market and the most advantageous market, your contribution should be there to the organization. That's why you need. That's your job. That's the KPI to your job, JD, your description, right? That's why we want you to decide the principal market and the most advantageous market. Okay. I hope you are getting. It's really important. SLFR is 13. Fair value is a market-based measurement, not one that is entity-specific. Yes, it is not a entity-specific number. It's a market-based. Yes, principal market and the most advantage. Right. So, let's think about is the fair value definition. Fair value is the entity market specific definition. Entity specific definition. What do you mean by that? So then if you do the fair valuation, you have a kind of ability to compare this with one else. That's not a person specific individualized or comparing specific number. That's a common number for one market. If you do the fair valuation for land, for you and to some other category, they can have kind of a comparison in between two entities. Right? It is not a transaction specific, entity specific, personalized number. It is kind of a number, market-based number. If you do the fair valuation, that should be kind of a justifiable answer to someone else. Right? That's called fair value is a market-based measurement, not one that is entity specific. Right? It is a kind of a common factor to the whole stakeholders. If auditors come and do independent fair valuation, they should get the same value. That's why they are telling that it's a kind of a market-based number. It is not a specific number to one individual or one company. It should be assume that market participants are not forced into transactions. Yes, we discussed. The net operation එකක් තියෙනවා කරන්න. අද සල්ලි නැහැ. මොකද කරන්නේ? ෆෝන් එක දුන්නා. එයා වැල්යු එක දුන්නේ. As a pressure, අන්නාන් බිල් ඉක්මන. පාස්කේ තියන්න සල්ලි නැහැ. අන්නාන් බිල් ඉක්මන. එයා වැල්යු එක. The kind of there's another pressure to earn money. It should be assumed that market participants are not forced into the transaction. If there's a kind of a force, that is not the real value. We can't get the market-based measurement. If you have a force, it will be customized to that situation. That's the reason. You can link both, right? If there's a force, it will be customized. Because if there's a same transaction without that force, that will reflect the price. So then it will create a gap between two prices. So then if there's a gap between two prices, definitely it is not the, it is entity specific, personalized. That is not the market based. That's why we are telling it should be unforced transaction. To be unforced transaction. Then you have this language, right? You have to practice this language. To be unforced transaction. Right? When pricing an asset or liability, market participants consider the characteristics of the asset or liability, condition, location, age and remaining economic life, and restriction on use of sales. Once you are giving the price, this area should be focused. This area should be focused. What is that? Condition, the quality, location, where is it? And age and the remaining economic life, and restriction on use of sale. Restriction on use of sale. Condition, you're okay, right? Once you buy something, you know the condition. Whether it's expired, is that containing the required content, the elements included, all those things should be there. And then location. You want to buy it, right? You want to buy it, the location is really important. Whether you can get that from down south or hill country from Colombo. So the transport cost make a huge impact. If you are buying from other country, it will take shipping cost and delivery cost. That will be another burden. So then you can buy it from local market. So then all those things add a value in that price. If it is a quality condition, we have more dates for expire dates. So then that add a value to the transaction. Location also make a value to the transaction. Age and the remaining economic life. Age and the remaining economic life. What do you mean by that? Age and the remaining economic life. Age. What's the age of that asset? And the remaining the economic useful life. What do you mean by that? Economic useful. Do you know? You may know useful lifetime. What do you mean by economic useful lifetime? What do you mean that? Alright, useful lifetime. What is that you want to do? Okay, 16. Useful lifetime. What do you mean by that? What do you mean by that? Do you know the exact meaning? I'm asking the real meaning of useful lifetime of an asset. Useful lifetime of an asset. Kalau kita pun dana standard dengan manghan ini. Apa start buat kerana hande? What do you mean by that? Useful lifetime. Another. What do you mean by this? Get my details. Yeah. How to design that? Who is the person design that? Yes. Like a comparison. You will know then only you can understand restriction or use of age and the remaining economic life. Useful life. Useful life is the lifetime given by the estimated lifetime given by the management to particular asset. That's called useful lifetime. Discuss this, I think. No. So, useful lifetime and the economic useful lifetime, two different definitions, right? Two different standards. For useful lifetime, you have to refer LCS 16. For economic useful lifetime, you have to refer LCS 17. 17, I think. 17. 17 lease. 17 lease nil. Yes. Okay, 17 for leases, economic useful lifetime, right? So then you are purchasing a refrigerator. You are purchasing a refrigerator, right? Maybe LG or different brand. The same, the produced by LG. Yeah, right? So then same refrigerator, same refrigerator. Same refrigerator, they have given the producer, manufacturer has given a lifetime for this refrigerator. That was given by the manufacturer to use this asset for the core objective of the asset. That is called economic useful lifetime. The period we can use an asset for economically. What's that period? It was decided by the manufacturer. That is called the economic useful time. That is same for this to this. That may be 20 years. That was decided by the manufacturer. Manufacturer decided. How did we decide this? Based on the economical usage of the asset, economical usage of the asset, economical usage period based on the core benefit of the asset. In other words, how many period, how long we can use this asset for to take the core benefit of the asset, right? That is called economic useful lifetime. That is not differs with the entity to entity and company to company, right? So then we have two companies, A company and the B company. A company doing retail business. A company doing retail business. B company business එකක් නෙමෙයි. එතන තියෙන ගයක්. ඒ family එකක් නෙමෙයි. This PQ B refrigerator will be purchased by A company. Q refrigerator purchased by this house. Right? So then, house won't be do the financials. A company will do the financials. According to the financial statement, they can use different useful lifetime. It may be not the economic useful lifetime. Maximum useful lifetime may be the 20 years, but they are expecting to have this asset only for 10 years. Only for 10 years. Then their useful lifetime is 10 years. What is this? Useful lifetime may be the owner of that asset, the purchase person of that asset, with his expectation, they decide the estimated lifetime they are planning to use. That is the lifetime, useful lifetime. If there's a gap between the economic useful lifetime and the useful lifetime, there may be a significant residual value. Significant residual value. After 10 years, can we sell it? Yes. Can we sell it? For the purpose, for the pooling purpose, we can sell it. Because given economic useful lifetime is a 10 years, sorry, 20 years. But the usage should comply with the manufacturer's given conditions, right? ඔයා ෆ්‍රිජ් එක හැමදාම ඩෝ එක අරගෙන නම් පාවිච්චි කරේ. පාවිච්චි කරන්න බෑ 20 years, right? So then that should be, the power supply and continuously then on it. Or within a day there may be power interruption like 10 times. That may be impacted. That will reduce your useful life, economic useful lifetime. So then basically given basic surrounding should be located around the asset. Then only we can justify this, right? The useful lifetime is 10 years. That is subject to the company. That is the estimate given by the company, right? So that estimate may differ with the house, may differ with the other company. So then they are selling this to some other organization. After 10 years, that organization can use that refrigerator for another 10 years. Another 10 years. So then they will decide a useful lifetime. If they decide a useful lifetime 5, after 5 years they are going to sell. Then again that will be used for another user. So the useful lifetime may differ with the company to company. That's a company estimate, company specific estimate, right? Right. So then, may asset take 20 years. After 20 years, we are using refrigerator as a cupboard. Not only 20 years, you can use another 50 years. The fridge after 20 years, cupboard. So then you can justify that. So the whole economic lifetime should be not the 20, should be the 50. No, the clear definition is there. So the manufacturer is given, it's a co-benefit. What's a co-benefit? What's a co-outcome? But economic benefit. That's for the cooling purpose, not the keeping your, the other things like books or clothes into this, and that's another purpose. So then they have given for a specific period for the economic benefit, economically feasible period. That is called economic useful lifetime. That's a two different concept. So then I explained useful lifetime versus the economic useful lifetime. The summary is economic useful lifetime is common to each and every asset. And whatever the organization you are purchasing, economic useful lifetime is same. That's a useful lifetime given by the manufacturer, right? And the useful lifetime, that is a company estimate. That estimate can be changed. Within the organization, estimate can be changed, right? Okay. So then that remaining economic useful lifetime is a kind of a factor you need to consider once you are purchasing your asset. දැන් මෙතන මෙයා 10කට ගත්තා මෙයා තව 10කට විකුණුවා. මෙයා 10ම පාවිච්චි කරලා නම් විකුණන්නේ. ඔයා දැනගන්න ඕනේ මේක ගන්න වෙන්නේ රෙදි දාන්න තමයි කියලා. Why? The manufacturer given 20 economic lifetime already gone, right? This was used by one person 10 years, another person 10 years. If you are going to purchase this, you're supposed to give for like not the 5 million. It should be like 200,000. This is the only consideration you can give for the covered purpose. Covered එක මාකට කියද? ඔයාට ලක්ෂ 4කට ගන්න පුළුවන්. ඔයා covered එකක් ගන්න නැතුව පරණ fridge එකක් ගන්න බෑ. ඒක ලක්ෂ 2කට ගන්න පුළුවන්. That is not the economic useful lifetime. Right? That's all about accounting. That's all about not the definitions. Practical accounting language. If you know that language, you can fight, you can argue, you can give value addition to the organization. You want to be a person like that, not a kind of a person getting definition to the audience. We can get a second to that. The Excel එකට පුළුවන් ඒක කරන්න. PDF වලට පුළුවන් ඒක කරන්න. Definition එක search කරලා දෙන්න මේ කරා එකේ තියෙනවා. Right? So we have tools. So that we could complete the fair value standard. So they're planning to do some calculations. We have a lot of things to discuss here. We have many calculations, right? These definitions, approaches, and levels, inputs, examples. So those things need to be discussed. Here we have mentioned the valuation approach. We need to go through all those things. Definitely we can complete within next week. Fair valuation plus I'm planning to just to start consolidation. Yeah, we 50 do the same condition and we have a lot of we have 41 and 20 government grant. But I having anything to clarify what can come up with question. So that's it for today. So we will meet up in another analytic lecture in next week.